So let's go ahead, 3, 2, 1, and let's get into it today. So let's talk about what actually happened today, not what CNBC thinks happened, right? Because I think that's one thing a lot of people get misconstrued is they hear news and then they try to relate that to price when you can see within FlowScanner and Investor Central Club what's really going on with these prints, because it's going to show you where institutions are really placing their money. So today's FlowScanner told us a very clear story. This was not a risk-on day, this was not panic, and this was positioning, hedging, and selective conviction. Big money, it was not YOLOing. They were already preparing for this. Let's walk through this ticker by ticker and break down why the flow matters and what it tells us about where markets are leaning next. So, quick pulse check from this FlowScanner. When we look at our indexes, we're seeing a lot of defensive flow come through. Calls showed up in selective names like BABA, SLV, and Meta. Puts dominated, though, the broader tape, which is, again, showing that defensive positioning, especially with the current economic state that we're in. And then, finally, frequency stayed low. So this wasn't frenzy trading where we saw a bunch of prints. It was very selective. So there was like a methodical method that was going into these orders that we saw today. So let's go ahead and talk about our winner, chicken dinner, ding, ding, ding. Taking home the bell and the crown of top flow today is QQQ. And this is what we like to call a little bit of tech hedging mode. So when we go and look at QQQ, let's go ahead and, okay, you don't want to cooperate. That's fine. That's fine. We'll go ahead and just look at QQQ's flow. We'll go ahead and filter this by premium. And one thing that we can see is clear here today is in the morning, we saw a big put buy at 605 for February 20th of 2026. About 6.79 million dropped into that. It was a block, so that could have been negotiated off exchange, which again could mean that this is a hedge and not necessarily conviction, right? So we had 10 million in calls against 16 million going in puts, and that is important here. QQQ wasn't being shorted aggressively, as I mentioned earlier. A lot of these are for further out. Like, we're not talking short-term moves that these traders are expecting. These have some time to them. And this is going to tell us three things. Tech traders are still long, but they're not trusting the upside quite yet, and dealers are pricing volatility, not necessarily conviction, as I mentioned earlier. And this lines up perfectly with sticky inflation, Fed uncertainty hitting the tape today, and rate cut expectations getting completely pushed out. Now, our next one that we're going to go over is SPY. And by the way, this kind of correlates. You know, we saw a lot of put buying in the morning, and then we saw some call buying getting bought around that 10-20 range when we saw that nice little rebound on Q, right? Oh my God, isn't that amazing how that lines up? Yeah, I know. Next up, second place, taking home the silver medal for the day is SPY. And this is just showing us that macro anxiety is very much real and present in this market. We saw 24 million in total overall flow, with about 4.9 million going into calls against 19.18 million going into puts, babes. SPY flow, this was loudly defensive. It wasn't like, oh, I might come out of the closet because I'm gay. No, you're gay, sweetheart. Go put on some assless chaps and get in the Castro, because that's your life now, all right? This isn't traders calling for a crash, however. Let's look at this again. 655, 220, 2026. What is a theme we've been seeing over the last couple weeks? The 220, 2026 range has been overly bearish, okay? Let's say overly bearish, which means these are people building positions for more downside, not necessarily conviction that a crash is coming in. Now, three things that this could mean, right? Funds are hedging exposure, meaning they have a lot of upside that they're banking on, but that might not happen. So what are they going to do? They're going to hedge that exposure, okay? Dealers, they're flattening their risk, meaning if SPY does dump, that upside exposure is now protected because they still get paid out. And the big players are respecting the headline risk, meaning if you saw my PCE report earlier today, you'll see that we're not in the best spot for more upside right now, unless the dealers and market makers call for it. This is classic. We don't trust the next data print positioning, okay? That's how we need to look at SPY. Now, taking home third place in a turn of events, China came in and entered the chat, baby. We had Baba come in third place with our flow Dommy Daddy for the day, okay? 22 million in overall flow, with 22 million going into calls against only 634,000 into puts. God dang, that's a clean tape, baby. That's like when you wipe your baby's bottom and you don't get any poop on your fingers clean. You know what I mean? So if we go ahead and look at Baba flow for the day, just look at it. Would you look at it? 175, 185, 180s. Like, come on, man. It doesn't get much better than this. We saw some blocks for the big money prints, but we saw a plentiful amount of sweeps coming in, meaning these dealers, they want their money and they want to get into it now. Let's look at some Baba flow. Now, we did see some downside on Baba. Does this mean we could see more upside conviction? However, let's be honest, 352, 180s came in hot and heavy for the March 20th. Again, March 20th, another very popular tech bullish date that we're seeing in the tape as of recent. Now, this was, again, one of the cleanest directional signals on the board today, babes. Now, why does this matter exactly? Why should you care? Well, this isn't a hedge. This is outright upside speculation, okay? Traders are betting on China stimulus / valuation re-rating, all right? Baba flow was deliberate. It was going throughout the day. It was not random. These were not random prints by any means. Someone is expecting a policy headline or a macro tailwind to push them into those profits. Now let's talk about SLV next. SLV coming in fourth place. We saw 19 million in total overall flow. We're seeing 13 million in calls against 5 million in puts. And our most hit contract with 18, I believe. 18 hits were the $86 calls due for January 30th of 2026. That is some short-term bullishness. That's what I like to call a little bit of conviction in my life. And yes, they were all sweeps. Now, why do I care about sweeps versus blocks? Because sweeps will tell you these are dealers who are like, I want to get into this right now. Not yesterday, not tomorrow, but right meow. Okay? So silver's quietly continuing to act like an inflation hedge, a rates hedge, and a Fed credibility hedge, okay? It's kind of like what gold was last year. This isn't meme metal flow by any means. So no, you will not see your Redditors yellowing grandma's pension fund into this. When SLV lights up along SPY puts, yeah, that's a defensive macro cocktail, okay? And that's all you need to know. Now, speaking of some more defensive cocktails, let's throw another olive into our martini here. IWM came in after SLV today with 18 million in total overall flow, with 2.8 million in calls against 15.9 million in puts, right? Right. Okay, babes, let's go ahead and digest this real quick for you because I need a little bit of volatility in my life. Now, looking at IWM, we'll see we had 8 hits on our most commonly hit contract. Again, this doesn't want to pull for me, so we'll just look at overall flow and order that by premium. Gosh darn, would you tell me that? That looks like there's some bears in the woods hiding out to eat me, brother. 3 top prints today. 265, 256, and 260s. About 1, 2, 3, we'll call it 3.5, 3.6 million dumped into these alone. This is the market basically saying growth is fine, but leverage is not. And leverage is not something you're going to get from IWM, babes. All right. Small caps hate higher rates, sticky inflation, and tight financial conditions. Because you want to know why? They can't afford it, Jerry. They can't afford it. And that is the reality of the situation. IWM flow tells us that risk appetite is starting to narrow like your butthole, not expand like you just took a popper, okay? Now let's go ahead and talk about everybody's favorite overpriced mobile manufacturer, Apple. Apple saw 18 million in total overall flow, with 1.3 million going into calls against 16.67 million going into puts, right? Now, when we look at Apple flow today, we're seeing some big buys at the 260 and 250 level. Almost about 15 million dumped into downside on the weekly for 260. Mind you, this is a hedge, most likely. They're buying premium without paying the price of it, and they're buying downside protection. 717 2026 for the 250s. Again, that could be a hedge. Now, looking at Apple's chart, they're going to release a $2,000 foldable, by the way. Psychopaths. I don't know why they're trying to get into the foldable market. You already make the iPad mini. Just stick with the, like, you know what? Just make the iPhone look different, because I don't want an iPhone 17 that just folds in half. That's not sexy or dynamic to me. By the way, the new iOS update makes me feel like I've never used an iPhone a day in my life. Anyways, Apple is currently expensive, crowded, and it's very sensitive to rates, especially in this geopolitical environment. Flow says institutions are protecting gains. They're not chasing upside at this time. There is no panic here. We like to call this just straight discipline. Daddy discipline. And that's what they like to call me in the club, if you know what I mean. Now, let's talk about Meta. Meta, we saw 17.6 million in total overall flow, with 12 million going into calls against 5 million in puts, right? Meta stands out as one of the few tech names seeing real call interest. This suggests earnings confidence, a strong ad narrative coming into play here, and relative strength against broader tech. This took specific conviction, not sector-wide optimism. And we can see that within the flow. I mean, look at here. We're seeing $700 calls for 12/18 of 2026. Someone just decided to spend $7,000 a contract. That's conviction if I've ever seen it, brother. And when we're looking at the overall flow, it looks like calls were beating puts out on the broader market today. So let's go ahead and put this all together like one big ugly soup. Indexes are being hedged, metals are being accumulated, small caps are being avoided, and select stocks are getting surgical upside bets. This is late cycle macro aware flow. All right, this isn't euphoria, this isn't fear. It's what we like to call smart money playing defense with optional offense. So how to use this? Well, if you're trading this environment, respect hedging signals, avoid broad index bias, focus on stock specific flow, and watch metals and volatility closely. And finally, tune into free Wi-Fi radio every day, because we break down the flow and have a pretty cool community over there. This is a market that's going to punish impatience. So you have to sit and hang out. Why not hang out with me? I'm cute, okay? Now, if you want real-time FlowScanner access, big money alerts, and context behind these trades, that's exactly what we do over at Investor Central Club every single day. Make sure you use Supermax to get 20% off your first month at investorcentralclub.com to get this real-time data for yourself and do your own analysis, okay? Stay sharp, trade smarter, and don't fight the flow. Make sure you like, subscribe, comment down below if you found this video helpful. Hope you guys have a great day, and I'll see you in the next recap.